Hello and welcome back to my show. I hope you're all well. Let's get to the news. Today, I want to share with you a debate that I watched. Bitcoin expert, his name is Michael Saylor, if I pronounce his name correctly, versus gold mining expert who studied and has been around gold all his life till now. So he's a gold mine expert, and his name is Frank Gustara, if I got that right. Okay, so they're on Stansberry Research Show, the Stansberry Research Show, and they get asked certain questions. So we're gonna dive into what they like, which one is the better monetary system. And Michael Saylor said that Bitcoin bottoms down. He says Bitcoin is the most efficient monetary system we have yet to implement successfully. It's 21 quadrillion satoshis, 350,000 transactions a day. It costs about 10 basis points, he says, of the monetary network to clear those transactions and to secure the network, and it stores value. That's what he says, and provides effectively for free after those transaction fees. But Frank Gustra, he is not on Bitcoin because of the restrictions, potential for government regulations, because we spoke before about how many factors, many risks involved, or many people who were in it, like Nassim Taleb, the author of Black Swan, where he was all in it, and now he's like, it's just a gimmick, it's a Ponzi scheme, so he's out. And Frank Gustra says that the government can come in and regulate it just like that. They could say, the headline could be, or it could be under national security. They could say it's for consumer protection, crimes, to deter crimes. Bitcoin mining consumes too much energy, and it does. It uses so much CO2. So the environmentalists could come out. What else? And the government could feel like, you know what? This is a threat to our central bank currency. So maybe they're waiting for it to become so big where they'll put the brakes on it with government regulations, capital, tax gains that will be charged to people if they want to cash out. And when I talked about the Bitcoin exchange, where you put your money into the Bitcoin exchange, and for a certain storage fee they give you, or a fee, or they give you like 8.5% on your Bitcoin, and in return for that they loan it out and it could go bust. Well, Frank Gustra said that something in those lines. He said that if Bitcoin was made illegal and they went through and they contacted the exchanges, Bitcoin exchanges, and they told them, we banned it, it's illegal, they could stop it right there, because it could cost them jail time. And if they want to subpoena records of the transactions to Bitcoin exchanges, they have no option to pull up the transactions. They have to, because this is the government, right? And they don't want to go to jail, right? Who wants to go to jail? So there's a lot of concern for Bitcoin. And while Michael Saylor kept on saying he kept saying Bitcoin is popular, more people are getting into it. Popularity ceases to exist after a certain while. There's always something different that's trending. What's popular is not always the most successful. And they went into government regulations. So Frank Gustra said this is like the Game of Thrones. He presented the risks. He says the biggest threat would come from government and central bank government regulations. Look at it. They're in charge of the infrastructure, the critical components needed to even have Bitcoin existence, including the grid, the networks, to say. But he said, Gustra, he says, if you're trying to Mike Saylor, if you are pretending that Bitcoin is unstoppable, risk-free asset, you don't know what you're talking about. And then he said, history has shown that government go to extreme lengths to protect their monopoly or currency, and they will not tolerate a global decentralized currency, which is very true. And then Daniela, the host of the Stansberry research. She said, you make your case for Bitcoin. How do you make the case for Bitcoin as the better asset? She told Mike Salyer, and he says, well, look at PayPal, Venmo, Square. They're providing billion transactions in an instant speed of light. But what he doesn't realize, or he forgot, was that Peter Thiel, the founder of PayPal, said that cryptocurrency Bitcoin could be weaponized against the US, with China doing their own Bitcoin, so it can be attacked. So he's pulling back. If he was initially a mass proponent or supporter of Bitcoin, he's like, you know what? There's risks involved that I didn't think of in terms of cryptocurrency. And then they spoke about ETFs, and the gold expert Frank Gustra said, I'm not into paper gold currencies. I have to hold it to own it. So he said there's a lot of questions to ETFs, even gold ETFs, and I'm not going into that. Sometimes they don't exist. So he said, I stay away from gold. I prefer physical gold. I stay away from gold ETFs for many reasons. I like my gold to have no party risk. And then Gustavo said that the way I make a case for gold is that it's unstoppable, it's indestructible, its stability as a store value is vital to managing the central bank reserve currencies. And he says that look at China and India, they're the biggest mass purchasers of gold. It plays a big significant role in their culture. He said it's deeply ingrained in their culture. And not to mention, the central bank owns $7 trillion worth of gold, or exactly 333,000 tons of gold, which is 20% of all the gold ever mined. And Gustra says gold is a store value against inflation and devaluation of currencies and the sharp equity downturns. So what he's saying is, if the government is heavily invested in gold, why would they want to try to wipe it out? Which makes sense. And Gustra also said that gold has doubled. Gold benefits in times of crises. And that's true if you look at a gold chart. And I will provide that in the description aisle. But during the times of the Depression, when like the German mark, I think it was 1920, people were starting to accumulate them, and they thought that it's going to have a lot of value. And then fast forward to 1921, people were frantic. They were selling their marks, their German marks, for anything they could get their hands on, whatever value, because they knew at that point when there was hyperinflation, prices were off the charts, you couldn't get almost nothing for your German mark. So at that time, gold was steadily rising at that point. So it was surviving and thriving. It was like untouchable, you could say. And they also talked about how JP Morgan predicts gold suffering at the hands of Bitcoin. And it does, gold does have an effect on Bitcoin. I believe it's, I want to get my numbers here correct. I'm not sure if it's 24%. Okay, 24% of gold could be affected by Bitcoin as a part of 24%. So what, yeah. So that affected Bitcoin 24% of the time. Or, yeah. Gold. Okay, that makes sense there. Let's go to the next point. So then they spoke about regulation. We talked about that. And he said that the government, Gustav, they could illegalize Bitcoin. They could ban it. They could contraband it. They could wipe it out, all of institutional buying. If the FBI requested records from the Bitcoin exchanges, they would have to provide that to the government. Because the government wants to protect its central bank, its currency. It wants to protect its monopoly on that currency. and that includes their ability to execute monetary and fiscal policy. So what are we spoke about the risks involved for Bitcoin, so we're not going to go over that again. But NatWest, I remember I mentioned to you about it. NatWest is a commercial bank, I believe, in the UK, where they recently said that any of the businesses that we do business with, if they are accepting Bitcoin for their customers, we no longer want to do businesses with them. We're banning them. So that in itself, and Guardian reported this, that tells you that Bitcoin is under scrutiny. Okay, let's go to the next thing. We already spoke about Peter Thiel and how he said that Bitcoin could be weaponized against the U.S., so we will not go there. And but what's his name? The Michael Saylor said that there are risk factors for gold. They could be confiscated. He says they've been confiscated in the past. It incites violence. It has to be secured by guns, bricks, steel, concrete, carbon. So he said that there's risks involved for storage of Bitcoin. Of gold, but he says Bitcoin could be stored in cyberspace, so it's protected there, is what he thinks. So the fact that Bitcoin went up this past year, 12 months, 693%, it went too fast in a short period of time. The gold specialist, or the gold supporter, Gustav, said that when a asset goes up that quick, there's a question mark there. And number two, I guess he didn't really focus on that part, but the main focus he said about risky, that Bitcoin is, or gold or any asset, if you want to look at if it pays to own it, you look at it historically, and you need a significant amount of time to study that. And Bitcoin is pretty fresh and new. 12 months, he said, you need to look at an asset, how it performs 4 years, 5 years. And he says that the performance for gold, it survived and thrived 4 years, and it's doubled. So it is definitely a successful asset, and historically he's learned that, and we've learned that, because he said that we've measured gold over 4 years and it's went up 4-fold, and it's outperformed during times of inflation, secular decline, times of uncertainty, and those are the times we live in now, or where we're getting at, because we also spoke about how financial strategists, Gammon included, said that this is setting the stage right now. This quantitative easing by the government is setting the stage for hyperinflation. We're seeing the symptoms, the signals of where we're going to see Weimar 1922 depression, the Great Depression. And what factors affected the gold? Gustav said gold is affected, we said, by 24% of portion of Bitcoin. 24% was attributed to Bitcoin. 36% was attributed to the higher US dollar. 40% was attributed by higher bond yields. Trying to see if I missed anything. No, I think, you know what? And not to mention Yellen, Secretary of Treasury Yellen, and Federal Chairman Jerome Powell, they emphasized, saying that not only is Bitcoin, quote, highly volatile, but it is speculative. It's a speculative asset. Not to mention, and they said that the consumption, Yellen actually said this, the consumption of energy to do the Bitcoin mining is, quote, staggering. So if they are pushing against it and they're like, we're going to do our own Bitcoin, you know they're going to crack down on it. They have the physical and ability and the power to do so. So it's like you can't fight City Hall, right? So if they're telling us this, and they also said that if investors, Yellen actually said that, she said, if I feel bad for investors, they're going to lose considerable amounts of money if they continue to go with this Bitcoin. She says here, are there any, okay, yeah, the fine lines, Powell, Yellen warns us on the average Joe of the risks and losses associated with Bitcoin, right? So they could regulate it, they could tax capital gains on it. So if they are the powers to be, and they're telling us this, there's something to, we have to read between the lines and figure out, you know what, there's something to it here. So that is the news. Like I said, I'm not for Bitcoin, I'm not for gold. Everybody has to decide what's right for them. I am released myself of any liability, risks, any lawsuits. Whatever you guys do is you've done it at free will, not at my discretion. At your own discretion, you need to take responsibility for whatever decisions or wherever you put your financial assets at. But we did look at the Dragon portfolio, and it did say that gold, you should have 19% of gold. But that is what they say. I'm here to report the news and not to advise or suggest anything. So I want you to keep that in mind. Thank you for watching. I know this is a lengthy video. I hope you learned something, at least to open your eyes to what's out there. Be cognizant of it, because it could be life-changing. Thank you for watching. Be safe. Protect yourselves and your loved ones. And we'll see you next time in another video. Thanks for watching and your support. Bye.